The AI war just changed. AMD shocked the world, and Nvidia felt it. That is not just a title, it is a literal description of what happened. AMD gained 35% and 80 billion market value in one day. Watch all the way to the end to find out how we got. News hit that AMD had signed a massive deal with OpenAI. Within hours, AMD stock was up roughly 35%, the biggest single-day jump in more than 9 years, and about $80 billion of market value had been added out of nowhere. Wall Street went wild. Analysts rushed to tear up their old models, and at the center of all of it was a question almost no one had been asking the week before. How did AMD, the company that had been an afterthought in AI, suddenly become the company OpenAI was betting tens of billions of dollars on? OpenAI, the organization behind ChatGPT and one of the most influential forces in artificial intelligence, had just signed one of the largest AI chip partnerships ever announced. Not with Nvidia, the longtime king of AI accelerators, but with AMD. The scale was staggering. Up to 6 gigawatts of AMD Instinct GPUs across multiple generations, tens of billions of dollars in expected revenue, and a warrant structure that could eventually give OpenAI nearly 10% of AMD's equity if AMD delivers the hardware and if the stock hits aggressive price targets. This was more than a big purchase order, it was a line in the sand. For the first time in years, Nvidia's dominance did not feel inevitable. To really understand why this deal mattered so much, you have to go back to when Nvidia built a near monopoly, back to when AMD was fighting just to stay alive, and back to how one leader rebuilt AMD from the edge of collapse into a company that could finally challenge the king of AI. This is the story of how the AI war just changed. From CUDA fortress to near monopoly, for years the AI world effectively had one ruler. Nvidia. By 2025, most estimates had Nvidia controlling well over 85% of the AI chip market. In some training segments, analysts put their share above 90%. AMD sat down near 6%, and that slice was not growing. In some reports, it was actually shrinking. On paper, it looked like a simple story. Nvidia had the best chips, so they won. But that is only part of the truth. The real moat was not just in silicon, it was in software. In 2007, Nvidia launched CUDA, a programming platform that allowed developers to control Nvidia GPUs in a flexible, powerful way. Over the next decade and a half, CUDA quietly became the native language of high-performance computing and machine learning. Engineers learned CUDA in university. Professors wrote course material around it. Researchers published papers with CUDA-based code. Frameworks like TensorFlow and PyTorch were tuned for CUDA first. Companies built entire AI stacks assuming that CUDA and Nvidia would be there for the long haul. By the time the Transformer revolution and the large language model boom hit, switching away from Nvidia was not just a hardware swap. It was asking teams to rewrite years of code, tooling, and operational knowledge. CUDA became a software fortress around a hardware empire. Nvidia also saw the AI wave early. In 2016, long before ChatGPT, Nvidia was already publicly saying that deep learning would reshape the entire tech industry and was building hardware specifically for that future. When ChatGPT exploded in late 2022 and every serious company suddenly decided it needed AI, the default answer to the question, which GPUs do we use, was simple. You could call Nvidia. So where was AMD in all of this? Not leading the future. They were trying not to die. AMD on the brink. In October 2014, AMD was in deep trouble. The stock traded around $3. The company had billions in debt and had already sold its chip factories. Analysts openly questioned whether AMD could survive another year or two. The board decided they needed a different kind of leader. Not just a financial operator, but someone who truly understood chips and could still persuade investors to give the company time. They turned to Lisa Su, who had the kind of resume that made semiconductor engineers listen. Born in Taiwan and raised in New York, she studied electrical engineering at MIT, earning a bachelor's degree, a master's degree, and a PhD. She spent more than a decade at IBM, working on cutting-edge process technologies and eventually leading the Semiconductor Research and Development Center. She moved to Freescale Semiconductor and became a senior executive there. When AMD asked her to join in 2012, many people thought she was walking onto a sinking ship. She saw something else. She saw a company that still had powerful pieces and a chance to fight back if it focused. 2 years later, in October 2014, AMD's chairman called with a simple message: "Lisa, it is time." She became chief executive at a moment when many investors had already written the company off. Her plan was simple to say and hard to execute. Go back to basics, focus on the areas where AMD could truly lead, cut the distractions, and invest heavily in a new clean sheet CPU architecture that could go toe-to-toe with Intel. That architecture was called Zen. Zen was not a minor tweak. It was a complete redesign of AMD's CPU core. If it failed, the company had very few options left. If it worked, it gave AMD a real shot at relevance again. In early 2017, AMD launched the first Zen-based Ryzen processors. Performance was strong. Reviewers were impressed. CPU market share began to climb from the single-digit levels it had been stuck at. Over the next several years, that momentum compounded. By 2024, AMD had overtaken Intel in market value for the first time. Investors noticed. Lisa Su's compensation and her growing list of awards drew headlines, but the more important story was that AMD's stock had risen thousands of percent since she took over, and the company's value was now measured in the hundreds of billions. It was one of the great turnarounds in modern tech history. But while AMD was winning the CPU war, something else was happening. Nvidia was printing money in AI. The AI problem by 2024, Nvidia's data center business alone was generating more than $100 billion in annual revenue. Meanwhile, AMD's entire AI GPU revenue for that year was about $5 billion. Even as AMD celebrated wins in CPUs and gaming GPUs, its presence in AI accelerators was still small. The strange part was that on paper, AMD's MI300 series did not look weak. The MI300X, for example, offered 192 gigabytes of HBM3 memory and 5.3 terabytes per second of bandwidth, more than Nvidia's H100 on both counts. In some public benchmarks, AMD's hardware was competitive or even faster. Yet analysts were disappointed when AMD's projected $8 billion in MI300 revenue was revised down to $5 billion. And the final Instinct revenue for 2024 landed at that $5 billion figure. Investors remained skeptical. The market was blunt. The issue was not that AMD could not design powerful chips. It was that developers and large buyers did not yet trust the software stack that surrounded them. ROCm, AMD's answer to CUDA, existed and was capable. It was open source and flexible, but it did not yet have the polish, ease of use, and deep ecosystem support that CUDA enjoyed. For many companies, betting billions of dollars on a platform that felt less mature was still a bridge too far. Lisa Su and her team knew this had to change. Building a real AI strategy. In 2024, AMD began reshaping its AI strategy. One major move was the acquisition of ZT Systems for around $4.9 billion. ZT designed and built high-performance rack-scale systems for the world's largest cloud providers. AMD wanted their 1,000 or so system engineers and their experience building huge GPU clusters quickly. This signaled something important. AMD no longer wanted to just sell chips and hope others figured out how to deploy them. They wanted to offer full solutions. At the same time, AMD increased its investment in AI software. The company had already spent more than $1 billion in the prior year building out its AI ecosystem. It hired more software engineers, partnered closely with framework developers, and spent more time listening to what its biggest customers actually needed. One of those customers was OpenAI. The relationship began quietly in 2023 when OpenAI started testing some AMD hardware for certain workloads. There was no splashy announcement, just experimentation. But as time went on, the partnership deepened. AMD asked OpenAI to provide input on its next-generation accelerator architecture, the MI450 series. OpenAI shared its real-world experience, the bottlenecks in its current systems, and the performance characteristics it wanted from future hardware. This was not a standard supplier relationship. It was co-design. On the software side, AMD worked with OpenAI's Triton language and tuned ROCm specifically for large language model workloads. According to AMD's AI leadership, Lisa Su's response to progress updates was often the same. Good work, now go faster. For a company known for silicon, that level of urgency around software showed how seriously AMD now took the problem. By mid-2025, OpenAI was running some workloads in production on AMD MI300 series chips and was planning to expand that usage. The public confirmation came in June at AMD's Advancing AI event in San Jose, where AMD unveiled its MI350 series, built on the CDNA4 architecture. The MI35X and MI355X were announced with up to 288 gigabytes of HBM3E memory and around 8 terabytes per second of bandwidth, along with claims of large generational performance gains over MI300. The technical community studied the specs, but what made the biggest splash on stage was the presence of Sam Altman. The CEO of OpenAI stood alongside Lisa Su and spoke about working with AMD on its new accelerators and plans to use them in OpenAI's future infrastructure. That moment alone was a strong signal that AMD was no longer just a distant second option. Still, few outside observers realized how large the next step would be. The deal that shocked the market on October 6, 2025, the next step arrived. AMD and OpenAI announced a definitive agreement for up to 6 gigawatts of AMD Instinct GPUs across multiple generations, beginning with 1 gigawatt of MI450 starting in the second half of 2026. This was enough compute to rank among the largest dedicated AI deployments in the world. Financially, AMD's chief financial officer Jean Hu said the agreement was expected to generate tens of billions of dollars in revenue over its life. Some analysts estimated the total value could exceed $100 billion. The structure of the deal made it even more striking. OpenAI received a warrant to buy up to 160 million AMD shares at a token price of 1 cent if specific deployment milestones and stock price targets were reached. At signing, that stake represented nearly 10% of AMD. The warrant would vest in stages. The first portion would unlock when OpenAI deployed the initial 1 gigawatt of MI450 hardware. Additional portions would vest as OpenAI scaled to 6 gigawatts and as AMD's stock achieved higher price thresholds. If all the milestones were met and OpenAI exercised the full warrant, it would own close to a tenth of AMD, a remarkable position for a customer to hold in a major chip supplier. The market reaction was immediate. AMD shares opened sharply higher, trading more than 30% above the previous close. And by the end of the day, the company had added around $80 billion in market value. Analysts upgraded their outlooks. Research notes described the agreement as transformative and as a major validation of AMD's AI roadmap. Nvidia's Jensen Huang commented that he was surprised AMD would effectively grant such a large potential ownership stake before the new products had even launched at scale. For many observers, it was the first time in a long while that Nvidia sounded even slightly on the defensive. Hedging, not replacing, it is important to be clear on what this deal is and what it is not. OpenAI is not abandoning Nvidia. Sam Altman has stated that the world needs far more compute and that OpenAI will continue to buy Nvidia hardware alongside new AMD systems. This is not about replacing one vendor with another. It is about ensuring that OpenAI is never again constrained by relying on a single source for the most critical component in its stack. Other major cloud providers are thinking the same way. AMD already has partnerships with Microsoft, Meta, Oracle, and other hyperscalers. By late 2025, most of the top model builders in the world were using some AMD products, even if Nvidia still held the majority of the market. On the technical side, AMD's MI355X specifications explain why this interest is growing. Built on CDNA4 using advanced process technology, it offers significantly more memory than Nvidia's Blackwell B200 and comparable bandwidth. It supports multiple low-precision formats such as FP16, FP8, FP6, and FP4, with FP4 performance that sits in the same class as Nvidia's high-end offerings. Independent benchmarks have shown MI355X systems performing slightly better than comparable Nvidia systems on some Llama 3 training and inference workloads, with roughly 3% higher token rates in one training scenario and around 1.3 to 1.6 times higher throughput for certain large model inference tests. The point is not that AMD has suddenly become faster in every situation. It is that there is now another serious validated option for top-tier AI infrastructure, and AMD has a structural advantage that matters as much as raw performance: supply. The supply-side weapon, one of the quiet truths of the AI boom, is that there simply are not enough cutting-edge accelerators to satisfy demand. Nvidia's dominance, combined with the sheer complexity of producing these chips, has led to shortages, long lead times, and tough allocation decisions. Even with Nvidia consuming a large share of the world's advanced wafer and packaging capacity for AI processors in 2025, demand kept outpacing supply. Many companies that wanted more Nvidia hardware simply could not get it quickly enough. AMD saw an opening with the acquisition of ZT Systems and later a manufacturing partnership with Sanmina that allowed AMD to keep design and customer teams while outsourcing much of the build-out. AMD positioned itself to deliver large rack-scale systems more quickly. Some of ZT's prior customers had seen multi-billion-dollar clusters delivered in under a month. That kind of delivery speed is exactly what hyperscalers and AI labs crave. Taken together, the hardware improvements, the maturing software stack, the supply chain moves, and the OpenAI partnership all point to a single strategic goal: break Nvidia's effective monopoly and turn AI accelerators into a true multi-vendor market. For years, Nvidia has been able to command very high prices because its accelerators were seen as must-have and alternatives were seen as too risky or too limited. When one company controls the overwhelming majority of a fast-growing market, that company has tremendous pricing power. But monopolies or near monopolies are fragile at the edges. They can withstand competition in smaller niches. What they cannot withstand is a serious validated rival that offers similar performance, strong software, reliable supply, and a compelling total cost of ownership. A market too big for one winner. The data center AI accelerator market is projected to be worth hundreds of billions of dollars later this decade. Even a shift of 10 percentage points of share from one vendor to another would represent tens of billions in annual revenue moving. Analysts already expect AMD's share of this market to rise as existing partnerships scale. If the OpenAI deployment hits its targets, and if other hyperscalers expand their use of AMD hardware, the split between Nvidia and AMD could move from something like 90 to 10 to something closer to 80 to 20 over time. None of this is guaranteed. AMD still has to execute. The company has previously struggled with delays and supply constraints. The MI450 schedule, the availability of advanced memory and packaging, and the continued evolution of ROSIAM will all decide how much of this opportunity AMD actually captures. Nvidia is not standing still either. Its Blackwell architecture and future platforms continue to push performance, and its NVLink interconnect remains a major advantage for very large training clusters. The difference now is that Nvidia is no longer the only company that matters in high-end AI computing. For the first time in years, the market has a clear number two supplier that large buyers are willing to bet real money and real workloads on. The human engine behind the turnaround, at the center of that shift, is Lisa Su. Under her leadership, AMD went from a struggling company trading at a few dollars per share to a multi-hundred-billion-dollar powerhouse that competes at the very top of the semiconductor industry. Zen-based EPYC processors power many of the world's fastest supercomputers. Ryzen chips are in millions of desktops and laptops. And Instinct accelerators are now part of OpenAI's roadmap for building the future of AI. Over the past decade, AMD has delivered average annual total shareholder returns that far outpaced its peers and the broader market. Awards and headlines have followed, but the substance behind them is a decade of consistent strategic execution. That is why this moment matters. It is not just about one contract, one event, or one stock spike. It is about the culmination of years of repositioning AMD from a follower into a genuine leader in multiple parts of the compute stack. Where the AI war stands now, Nvidia is still the king of AI, but its throne is no longer unchallenged. AMD has fired the biggest shot yet at breaking that dominance. The AI war has changed. AMD shocked the world. Nvidia felt it. And for the rest of us, whether we invest in these companies or simply rely on the technologies they enable, this new era of competition is a good thing. When there is real competition, technology tends to move faster. Prices eventually become more rational. More organizations gain access to powerful tools. Innovation spreads. The future arrives sooner and reaches more people. The AI revolution is still just getting started. Now finally, there is a real race to see who will power it. Welcome to the next chapter. It is going to be one incredible ride. This race is heating up fast. No one gets to watch from the sidelines anymore. The next video is on your screen. Click it. Let's keep going.